So you're thinking about buying a property here in Las Vegas, and this is going to be your year. So before you purchase a property, you are definitely going to make sure you want to watch this video, because in this video, we're going to talk to you about 10 of the biggest mistakes we have been seeing our buyers make and them not be able to get into homes. As we always like to say on our channel, let the show begin, because we're getting after it right now. So if this is your first time to our channel, make sure you subscribe down below, tap that bell for notifications so that you can be aware of any of the videos that may be coming out in the future that could be of assistance to you. In today's video, we are specifically talking to you about 10, just a few of the things that sometimes come up that we see our buyers go through. And we definitely want to make sure you stick around to that last one, because that last one has been getting a lot of traction in the news, and we've seen a lot of people be very upset with this last mistake that they've been making out there. So we want to make sure you're aware of it. So the first one, jumping in. You've heard this one talked about so many different times. You want to make sure that you're pre-approved versus pre-qualified. Now, pre-approval is the one that we want you walking out, going out into the market with us. We want that. We want you qualified. We want you armed with your buying power. We want you really knowing how much you can afford and how much house you can afford, so you can feel confident when you write your offer that we know we have the ability to purchase that property. And we want the sellers and we want the appraisers and everyone else out there that's looking at our situation to be confident that we can get you pre-approved and we can purchase this property. We've seen too many people go out there, they start looking for houses, they start asking an agent to show them around, and then all of a sudden they're excited. They're like, okay, great, let's go back and let's get the lending stuff together now. We don't want to do that. We're not going to do that. And you want to make sure that you are aware of basically knowing we can't show you a house until we get you actually under contract, in the sense of signing what's called our buyer broker agreement. So when you do a consultation with us, you'll be able to understand what those things are. Very important. No agent in the nation, not just here in Las Vegas, but in the nation, can show you a property unless they have what's called a signed buyer broker agreement with you. They may have different terms. They may have a way of showing you properties and just charging you to show those properties. So you may have a one-time kind of show this property agreement, but you have to make sure that you go through a consultation with them, and you have to make sure that you are aware of what kind of fees and things you should expect when it comes to purchasing your property. So again, you want to make sure you sit down with us, make sure you get pre-qualified, and then more importantly, pre-approved is what we want. We want a pre-approval. We're going to introduce you to a lender. If you don't have one, we'll introduce you to maybe 1, 2, 3 of them. You decide which one you want to work with. And then from there, we arm you with knowing and having the confidence that you're ready to go and you can purchase your property. Pre-approval over pre-qualification. Second one, and this isn't necessarily in any particular order, but let's just say the second one. The second one is this: when you get that pre-approval, lenders are going to consider pre-approve you probably for a little bit more than you might be comfortable with, or maybe just at that particular amount. But we don't want you shopping directly at your highest level. You tell us, you tell the lender, you work with the lender once you get all your numbers together, and you figure out exactly what your comfort level is going to be. We don't want you out there being what's called house poor. We don't want you house poor where you're stressed about the mortgage amount. We don't want you necessarily stressing about where the money is coming from. We want to make sure you understand we're going to have money in this game. You've got to have money in order for you to purchase properties. I would love for it, for all the DPA programs, all the down payment assistance programs, DPA programs out there. I wish it would be a situation where you didn't have to bring any money whatsoever. I'm sitting here trying to think, do I have a situation where no one's brought nothing to the table in order for them to do it? Sure, there's been a situation where we've been able to negotiate a buyer not having to come out of pocket, but that buyer still had reserves. That buyer still had money in the bank. That buyer still had money in a 401k. That buyer still had money in other accounts or other assets or whatever that may be, in order for them to comfortably go into that situation and not really bring money to the table. But I want to make sure that we're clearing up, guys. Yes, we want to help you in regards to getting out there, finding a property. We know that affordability is a huge thing out there. Vegas is still very much affordable in the eyes of a lot of people across the nation. And yes, for some of our people that are living here, it is becoming much less affordable, but it still is a very affordable option in regards to people looking at Las Vegas from different areas. And we want you to really know you've got to have money in this game. It is not going to be a scenario where everyone's going to be out there or someone's going to be out there and assist you with everything and you have nothing out of pocket. You've got to have it together. So that would probably be the third thing I want you really understanding is make sure you're getting yourself prepared by talking to a professional. Don't try and negotiate your credit reports and your credit repair and all the kind of stuff on your own. So talk to a professional first. You want to talk to myself as your real estate agent. You want to talk to a lender. You want us really understanding exactly what your picture is so that we can help you with the strategy in regards to what you may need to pay off if credit repair is an issue for you. And with that thought process, let's make sure we understand here as well. Talking to a professional, talking to someone that's going to help guide you through the process, prepare you for the process is beyond vital. We're going to let you know that whether or not you have a 580, a 620, or if you have an 800, where you may need to do and what the plan needs to be. I've had people come in with the 580. They're assuming, well, because it's 580, I'm going to do an FHA, so therefore I should be able to get a home easily. It doesn't work like that. I want you to really think about getting yourself up to like a 620, 660, 670, 680. Get yourself up there. Get your credit repair taken care of. But again, reach out to us as the professionals first before you take that on by yourself. That is vital. We've seen so many people, I've called people, how are things going, what's happening? And they're like, okay, we're still working on a few things. And I'm like, okay, I hear you're working on things, but have you passed that plan by myself? Have you passed that plan by a lender? Have you passed that plan by your agent in regards to what you're working on? So let's make sure if you feel like that's an issue for you, let's talk a few months before you're ready to buy your property. And for those clients that walk in, which a lot of you guys have, that are in the 700s, that are in the 800s, sure, I would assume as well, we're going to be fine. Don't worry about that part. No. Let's definitely still check. We want to make sure everything's solid. Now, if you happen to be paying cash for all of it, then sure, we don't necessarily have to check your credit. But even if your credit's in the 700s, even if your credit's in the 800s, mine is the same way. I still talk to my lender and make sure we get a strategy in regards to how we want to make sure we move forward. I want to make sure nothing else comes up because I've had people in the 700s and the 800s, all of a sudden their work history doesn't work out. Their self-employment isn't working out. There's something that popped up on their credit they didn't realize was there. There's unfortunately, I've seen people do child support that may pop up. They may not realize that that's happening. So we want to make sure no matter what you think your credit is, we want to check that and make sure you're speaking to a professional and making sure we're helping you prepare and getting ready for that. So again, check with us as professionals. Don't do the credit repair. Don't do credit's great. I have an 800. I'm all good to go. Let's talk first before we get you out there. And this one's a big one. So we want to really make sure you are not co-signing for someone else. Please. It sounds fantastic to help someone get a car, help someone get an apartment, help someone maybe buy their own home or whatever that may be. But if you're in the process where you're about to purchase your own property, you definitely want to make sure you're looking at your credit and understanding your credit, and you don't have co-signing things going on. Because if that person starts missing payments and not taking care of those things, it does reflect on your report. It does reflect on what you can qualify for. I've seen people go, okay, well, I co-signed for that years ago. I thought they were taking care of it. I haven't had any issues. And all of a sudden that's dropped their credit scores 70, 80, 90 points. Sometimes I've seen one of them happen up to 100 points. So let's make sure we are not co-signing for people. We can help folks, but give them a loan. Don't do something where you're co-signing and then you're still connected with them. Give them a loan and call it a day. That's great. We can give them money in that sense, but do not co-sign. Make sure you have your credit and everything locked in and solid. No co-signing, please. And some people may not realize this, but you want to make sure that you get what's called a loan estimate. I call it sort of a loan guesstimate in a sense. We're going to give you an idea in regards to what you can qualify for, what the loan amount may be, all that kind of stuff. Once we found the property that you're interested in and all that kind of great stuff, your lender should be able to give you somewhat of an estimate. Again, it's going to be an estimate. It's going to be a tight estimate. We want to be as close as we possibly can, but you want to make sure you understand that before you go under contract. There's going to be a part that I taught you guys later on in regards to what that loan amount may be that is vital, and you want to stick around for that until the end of the video so that we can really understand what your loan guesstimate estimate is going to look like. But let's make sure you have an understanding of what those numbers look like before you write your offer. Please, before you write your offer. So have that understanding. And this one is starting to be a big one because this is coming back in. I'm going to take my scarf off here. It's been a little cold here in Vegas, believe it or not. But this one's a big one in the sense that loans or student loans are coming back around, and for some people those loans are being active again. So please don't ignore those student loans. We've seen some of those pop up and really affect people's ability to purchase their property, and we don't want that popping up. Like if you happen to buy a new home, sometimes that new home could take you 6 months. It wasn't necessarily registering on your credit report at that particular time, but 3, 4, 5 months later on it starts to come back into your life, and you have to start paying it again. And we've seen those student loans affect people's ability to buy. So please do not ignore student loans, and definitely make sure you tell your lender if you know for sure you have it out there, so they can find that and make sure it's showing up on your report or showing how it's affected. We want to make sure we don't get you into something beautiful, you start packing, we getting you excited for home ownership, and then all of a sudden we can't get you the house because student loans have affected. So please don't ignore your student loans. And I don't think we have to say this too much, but just in case, we want to make sure we're keeping our money in an account, in the bank, whatever that may be. We aren't keeping it in a coffee cup. We're not putting it underneath our mattress. We don't have it in a briefcase or something crazy like that. We want to be able to track the money as much as we can, or I should say the lender is going to want to be able to track the money, source your funds, all of those different types of things. So we don't want it tucked away somewhere, or we want to understand where your money is going to come from. We want to understand if you're going to do a loan, or if you're going to do something from a family member, if a family member is going to help you. You want to discuss all of that stuff with your lender, with your loan officer ahead, so that we don't start going forward, finding you a property. And again, like we said, find something else and you want to throw something in there like, oh yeah, we're doing it this way. This is where we're getting the money from. Have all of that discussed up front. You really want to make sure you know where your money is. It's not hidden somewhere. It's not coming from someone all of a sudden and you haven't referred or told the lender that that's what's going to be happening. So again, make sure you're sourcing where your funds are coming from and your lender's able to source where those funds are coming from, so that you can be comfortable, confident in regards to closing and getting yourself over that finish line, and we can hand you some keys. This one's a little bit of an important one as well. Not a little bit of important. I think it's important for sure. Make sure that we don't over upgrade our properties. Now, I've had some fantastic clients. They get in there, they're buying their beautiful properties, $700, $800 million properties, whatever it may be, and they get excited and they want this house to be beautiful. They're looking like HGTV worthy, and they want it to be a stunner. I want it to be a stunner for you as well. But let's also make sure that we aren't over upgrading for our neighborhoods. The money that you're putting into your upgrades, you're not going to get necessarily dollar for dollar, nickel for nickel later on down the road. Of course, we want your property to be beautiful. We want it to be something that you will enjoy. Now, if you're fine with the idea that you want this in your property and you want to enjoy it, but you're not too concerned about it giving you back their return, but you know you're going to enjoy this feature or this upgrade in your home, then go for it. Do it if you want to do it. But please make sure you're understanding what the values of your neighborhoods are, the growth in your neighborhood and all that kind of great stuff before you over upgrade and you overspend. And I am not calling out any of my past clients that put a lot of wonderful upgrades into their properties. There's nothing wrong with beautiful upgrades. Let's just make sure we don't upgrade too much, all right? Now, this one is going to be a great, I would say, real estate strategy in the sense that we want to make sure that we don't purchase without having an exit strategy in regards to looking at the property. So I just call it my Las Vegas, real estate strategy in regards to looking at our contracts, understanding our contracts. If we're purchasing a resale property, we're going to be using what's called an RPA, a residential purchase agreement. In that residential purchase agreement, there are some built-in exits in the sense of that will be able to allow you to move away from the purchase of a property if for some reason life changes, if a job transfer didn't happen, if something happens with family and you can't move here to the Vegas area. All those things need to be in place. But understand as well, timing of when you do that exit, timing of when you cancel contracts, all of that is still doable even with the day before we close. But understand there still will be consequences with those things. There may be a financial consequence we may have to deal with. There may be something where you have to pay a certain amount. So we want to make sure that we understand that by us talking through the RPAs, that residential purchase agreement, understanding what that could be. When you're working with a builder, a new home, this is one of the reasons you definitely want to make sure you take an agent with you. Because if life happens, if you have to cancel, you want someone fighting for your rights. This is another reason, again, hear me on this. Before you walk into a new build, do not start signing things. You don't know how to get in there and really truthfully look at that contract unless you have representation, someone that can fight for you if for some reason something does go wrong. And again, there's plenty of ways we can get you out of a contract. We just have to know what are the least harmful financial ways we can get you out of the contract in that sense. All right, so again, know your strategies, know your exit strategies before you actually go into the contract. With the builder, with a new builder, that contract is going to be extremely heavy towards the builder. It's going to be builder positive more so than it will be for you as the buyer. We want to be able to explain that to you. So it's vital, again, that you go in with us before you start looking at properties with builders. And definitely with the same thing in regards to resales. So again, know your strategy exit before we start going forward in the contract. And this is the one I talked to you about earlier in the video. We want to make sure that people are understanding what happens when they're like, I purchased my property at this amount. This is basically the topic. We want to make sure that we understand what our tax situation is going to be about with the property. I am not a tax advisor. I'm not a CPA. You definitely want to make sure you talk to a CPA when all these things come up. But we want to understand what the difference, especially when you're buying new, especially when you're buying a new home. We want to understand what the property is going to be assessed for when we first go into contract, and then what it's going to be assessed for after we close on that property. Again, this is vital. This has been hurting a lot of people. A lot of people have been shocked. It's rare that I've seen it here in Vegas. Have I seen it over the years? Sure, I've seen one or two. And listen, guys, I've sold hundreds upon hundreds of homes. And I have not seen it often, but I have seen it maybe twice in all of those sales where a person was shocked about their mortgage payment skyrocketing, because it has happened and it still does happen. We want to make sure that we're not just assessing the value of the land, but we're assessing the whole entire structure on the land, with the land, et cetera, et cetera. It depends on how the contract's written, but again, we want to make sure you're talking to the builder, talking to the loan officer, talking to the escrow, all those people. We want to make sure we understand what that number truthfully is going to be once we have closed. You want to understand what kind of loan you're doing. There's so many different terms as well. If you're using an ARM on the loan, if you're doing a buy down where you buy the rate down, or if you buy down the interest rate for a certain period, then that interest rate changes. You want to know when those numbers are going to fluctuate. So again, you want to make sure you are understanding what your tax and your number situation is going to be. And you'll understand that by working with a professional real estate agent and making sure you go through these numbers with the loan officer, especially if you're buying new or if you're buying resale. You definitely still want to go through these numbers with your loan officer. So again, so many different things can happen, but again, this is why it's important. Work with a professional. Make sure we're there with you, taking you through the process, helping you through that process. Las Vegas is a beautiful city. It's a dynamic city. It is growing like crazy. We are expecting a phenomenal year. We are seeing already buyers come back into this market right now. We'd encourage you to get into this market sooner rather than later, because once that spring door definitely really opens up, we know for sure that buildup that's been there. We have dropped interest rates, or the interest rates for some people that's been stopping people. That is now down below 6%. We're seeing that. So we know more people are going to be coming into this market. Now, my buyers that are ready to go, and I'm going to throw this in here. Let's make sure we are prepared. And the way that we are prepared is by reaching out to us, making sure we do a consultation with you, making sure we go over a strategy. We have a strategy going into you purchasing, because the prepared people it does not matter what the timing is. Timing is vital in so many things. Timing of things is extremely vital. But when you are prepared, when you are ready to go, interest rates for some people, it doesn't matter. When they're ready to go, and they need it, they get it done. They're prepared. Let's make sure you are prepared as well. Let's reach out, subscribe down below, tap that bell to make sure you get all the notifications for our next video, all that kind of great stuff. And we look forward to seeing you here in Vegas and helping you get into your new home, since you have decided and it's time. Let's do it.